Good afternoon, everyone. I see Anshu Agiwal, moderator of this 76th webinar of CP committee. Welcome you all this webinar. We are just privileged to have this welcome. I'm just privileged to welcome you all in this webinar. The CP committee, the Continuing Professional Education Committee, is regularly organizing this type of webinars on every Wednesday and Friday. So request to all, you can block your these 2 days where all the webinars have been organized. In today's time, it's not about the auditing and taxation practice, what we are doing the CAs. The future of CAs depend how flexible we are to adopt the new innovation and the new technologies. So going forward in the same area, CP committee under the dynamic leadership of Sri Shukla sir and Sri Vishnu sir, organizing webinars on all the conventional and non-conventional topics on regular basis. So we all chartered accountants can upgrade our knowledge and adopt the whatever the things are going on in this market, in the economy world. So going forward, I would like to invite first our speaker of today's session. The first topic is about the essential company laws compliances in this current environment. For this, we have CA Vikram Saraf from Jaipur City with us for this first session. Vikram sir is chartered accountant by profession, as also a law graduate also, and has a vast experience of 23 years in this field. With his experience in company law, the institute itself has this institute, the committee, corporate law and corporate governance committee of ICI, has been appointed as him as a special invitee on the year 23-24, and he is taking many of sessions and the giving books and the matters in publications. So going forward, I'd like to invite CA Vikram Saraf sir, and sir, mic to you. Please carry your session.
Thank you, Anshul. Am I audible?
Sir, audible.
Good afternoon, friends. First of all, I would like to convey my thanks to CP Management Committee, who has given me this opportunity to share my views on today's topic with all of you. And then I will thank you to all the participants who have spared their time from their busy schedule to make this webinar successful. May I share the screen just a minute? स्क्रीन दिख रही है आप लोगों को? Is it visible? Screen is visible?
Visible है.
Yeah. Friends, today's topic is essential company law compliances in the current regulatory environment. Friends, compliances are mandatory and it's very important for all the acts like income tax, GST, TDS, labor laws, whatever law we practice into. In every act, compliances are important. But so far as matters concerned with Companies Act, there is a difference between Companies Act and other acts. Friends, in case of Income Tax Act, the assessors got various messages from the Income Tax Department about their ITRs, about their audits, about their revision of returns. They got mails, they got paper advertisement, and nowadays department is doing radio advertisement, FM advertisement also. Again, in case of GST, there are so many complaints. There are so many other compliances which are dependent, and due to which we have to comply with the written filing processes. But in case of company law, there is no such mechanism. Neither the company is getting any email from the department, nor the clients are aware about the compliances of the Companies Act. So as professional, it's our duty that we should take care about the compliances of the company law, because now in this era, everything is online. Nothing is to be done through manual system. Every form, every intimation, every notices, every compliances, everything is to be done through portal only. And if our filing is late, there are consequences. There is additional fees payable by us. There is penalties payable by us. And client is not aware about these compliances. So it's our prime duty that we should take care about the compliances so that client should not unnecessarily suffer from any sort of penalty or any irregularity. Friends, today I will start my discussion technical discussion with the definition of small company. Government has recently amended the definition of small company. Friends, the concept of small company was introduced in Companies Act 2013 only. Before 2013, there was an act called Companies Act 1956. In 1956, there was no concept of small company. There was no definition of the small company. Now, in new act, which is 2013, government has divided the companies into two parts. One is small company, and second one is other than small company. Friends, why I am discussing about the small company? The reason behind this is because recently, with effect from 1st December 2025, government has amended the definition of small company. Friends, there are so many relaxations from the MCA side to the small companies. As an auditor, as an company secretary, as an ROC practitioner, we got many benefits, many advantages for the small company. Friends, the concept of small company was introduced in 2013 Act. Effective date of this small company was 1st April 2014, and the initial definition given by the MCA was that any private company which fulfills any of the condition. There are two conditions. First condition was paid up capital is 50 lakh or turnover is up to 2 crore as per the last statement of profit and loss. Friends, initial definition was like this. Interpretation of this definition comes to that if any company is fulfilling any of the condition, either it's a capital is up to 50 lakhs or it's a turnover is below rupees 2 crores, it will cover under the definition of small company. But the intent of MCA was not like that. MCA was wanted to fulfill both the condition, not any one condition. Both the conditions should be fulfilled by the company. So the first amendment in this definition comes on 13th February 2015. And in this amendment, the word capital or turnover was replaced by capital and turnover. And the definition was paid up capital is up to 50 lakhs and turnover is up to 2 crores. It means any company which is fulfilling both these conditions will be covered under the definition of small company, else it will be out. Say, for example, if any company's turnover is below 2 crore, but its a paid up capital is more than 50 lakhs, then it will be out of the definition of small company. Friends, here the word is used is paid up capital. It does not include any type of reserve and surplus. It may be profit and loss credit balance. It may be, say, security premium account, or it may be any other reserves. We have to check only the definition of paid up capital. Friends, the initial definition introduced by the MCA contains that the turnover as per the last profit and loss. It means if any company is checking its status of whether it is small or not during the year, any cutoff date, say for example, it's on 24th December, then it's a last profit and loss account can be of 31st March 25. It can be of any other date if it is prepared by the company for any cutoff date for any other act, like for any banker purposes, for projection data, for any other things. Then in 2018, with effect from 9th February 2018, there was again a change in the definition, and the word last profit and loss statement was substituted by the word as per the profit and loss for the immediately preceding financial year. It means MCA cleared here the definition that turnover we have to check for the period last financial year ended. Say for example, we are checking our status on 24th December 2025, then we have to check the turnover as on 31st March 2025. Friends, then with effect from 1st April 2021, this definition was changed, and this was a major change in the definition, and the limit of capital was increased from rupees 50 lakhs to 2 crore, and the turnover was increased from 2 crores to 20 crores. It means with effect from 1st April 2021, the new definition was if the paid up capital of any company is below 2 crores and turnover is below 20 crores, it will fall under the definition of small company. Then there was a major change in the definition of small company with effect from 15th September 2022, when the paid up capital criteria was increased from 2 crore to 4 crores and the turnover criteria was changed from 20 crore to 40 crore. Friends, when on 15th September 2022, this amendment was introduced, in my opinion, I think 90% companies of all over India was covered under the definition of small company. Friends, now latest amendment in this definition was made with effect from 1st December 2025. And now the paid up capital criteria is increased from rupees 4 crores to 10 crores, and turnover is increased from 40 crores to 100 crores. Friends, now the definition of small company is so wide that I think, in my opinion, nowadays more than 95% companies of all over India will be fall under the definition of small company. Friends, why the MC is changing the definition again and again and again? The reason behind this is very simple. Government wants the less compliances, less penal provision for the small companies, so that small businessmen can run their company in an easy way. This is the concept of ease of doing business. Friends, the main thing comes to how we have to check the status of the company. When we have to check the status of the company, say for example, if we will conduct the audit of 31st March 2026, and the numbers of paid up capital and turnover as on 31st March 2026 is like as under. Paid up capital as on 31st March 2026 is 8 crore rupees. Paid up capital on 31st March 2025 of the same company was 5 crores. Turnover on 31st 2026 is 105 crores, 105 crores. And turnover on 31st March 2025 was 80 crores. Friends, when we will conduct the audit of this company for 31st March 2026, this company will fall under the definition of small company. Why so? Even its a turnover as on 31st March 2026 is 105 crore, which is more than 100 crores. Why this company is falling under the definition of small company? The reason behind this is we have to check the status as on the date of event. In this present example, our event date is 31st March 2026. As on 31st March 2026, the paid up share capital of the company is 8 crore, which is below 10 crores. Turnover we have to check for the last preceding financial year, that is 24-25, and the turnover as on 31st March 2025 of this company was 80 crores, which is again below 100 crores. The company is fulfilling both the conditions. Its capital is below 10 crores, its turnover is below 100 crores. That's why this company will fall under the definition of small company. Friends, this is very crucial how we are checking the status. Say for example, when this amendment was introduced with effect from 1st of December 2025, and annual filing of the companies for 24-25 is still pending. Companies are doing its annual filing, and the last day to file the documents is 31st December 2025. I received so many calls that, sir, now definition has been changed, so our status will also be changed. No, my answer is no. Because we are doing the filing for the financial year ended 31st March 2025, and as on that date, the definition of 10 and 100 crore was not there. At that time, turnover was of 4 crores and 40 crores. Friends, it's the event date. Say for example, if we are conducting any audit as on today for financial year 2022-23, then we have to check the status for 22-23. Friends, in this case, since this amendment of definition with effect from 1st December 2025, we are facing some problems on the MC portal for filing of annual return MGT 77A. In case of small companies, companies are required to file form MGT 7A, and in case of other than small companies, companies are required to file form MGT 7. But after this amendment of definition, portal has automatically changed the status of the company. And if any company was small, other than small company on 31st March 2025, accordingly it is liable to file form MGT 7. But now system is showing some errors that your company status is not small, your company status is other than small, and you are liable to file form MGT 7A. Friends, in this case, we should take care that even we are filing MGT 7A, because system is not allowing us to file MGT 7, we should do one thing. We should take the error printouts where it is showing that your company is not liable to file MGT 7, it is required to file MGT 7A, And we should make a clarification letter that status of our company on 31st March 2025 was this. Accordingly, we were liable to file form this. But since system is not accepting this form, we are filing this form, and errors, screen errors of this message is enclosed here. So that in case if in future if we got any notice from the MC side, we can reply it. Friends, is there any exception to the definition of small company? Yeah, there are some exceptions to the small company. A private limited company can never be a small company because the definition of small company starts with a private limited company. It means a public limited company, irrespective of its and its turnover, cannot be classified as public company. Any company which is either a holding company or a subsidiary company, then it cannot be classified as small company. In this case of holding and subsidiary, the criteria of capital and turnover is immaterial. Say for example, there is two companies. One is company A private limited, another is company B private limited. Both the companies doesn't have any turnover. Turnover is 0, and the paid up share capital of both the companies is rupees 1 lakh each. But company A holds 100% shares of company B. Then both the company will be out of the definition of small company. Both the company will be out of the definition of small company, and it will be covered as other than small company. Section 8 company. Section 8 companies are the companies which are made for not-for-profit organization. These companies are out of small company definition, and any other company or body corporate which is governed by any special act like RBI Act, SBI Act, LIC Act, etc. All these type of companies will never fall under the definition of small companies. Friends, I am talking about the small company so depth, and now I am telling you the advantages available to a small company, because these advantages are very systematic and MC has introduced them on very timely basis. We should take care that all these advantages are available to a small company. Friends, in case of Register of Companies practice, ROC practice, any type of communication with the ministry, MCA or department is made through the online system. We have to file e-forms. For every event, we have to file e-form. Like for balance sheet filing, we have to file form AOC4. For annual return, we have to file form MGT7 or 7A. For director's change, we have to file form DR12. For charge creation, we have to file CHG1, CHG4. For capital change, we have to file SS7, PS3, and so on. So friends, in case of small companies, certification by a professional is not required. See, in case of small company, one form is commencement of business. This is one-time form in the lifetime of the company. When company is incorporated, every company is liable to file commencement of business form. That form is required to be certified by the professional. Other than that, there is no form which is required to be certified by the professional. Then filing of annual return in MGT7A instead of MGT7. Friends, as we have discussed earlier, MGT7A is abridged annual return, which is again not going to be certified by the professional. And this is the single form which is required to be certified by a practicing company secretary only. Otherwise, in rest of the forms, all the chartered accountants and practicing ICWA are allowed to certify the forms. Friends, applicability of abridged board report under section 134(3)(a). Again, in every case, in every company, we have to conduct the audit of the company and we have to prepare the abridged board report. If I talk in theoretical terms, then board report is prepared by the company, financial statement is prepared by the company, and we have to just conduct our audit. We have to make our comments through our audit report. Nothing is to be done. But in practical sense, if I talk, in most of the cases, all the financial statements are prepared in our offices and board reports are also prepared in our offices. Friends, in case of abridged board report, there are so many points which are not applicable in the abridged board report, and this abridged board report is applicable in case of small company only. Then fast track mergers. Friends, the concept related to merger and amalgamation and demerger, earlier there was all these type of cases were dealt by the High Court only. Then MC introduced the concept of NCLT. Then all these cases are shifted from High Court to NCLT. Nowadays, for any type of amalgamation merger, we don't require to approach the High Court. Now, all these type of cases are dealt with the NCLT only. Friends, all merger, demergers, amalgamation are dealt in section 232. But going for any amalgamation, it's a time-taking process because it is to be dealt by the NCLT, and NCLT requires the report of Registrar of Companies, official liquidator, and the concerned regional director. So, government to make the merger fast, government introduced the concept of fast-track merger under section 233, and in this section, government introduced the concept of merger, amalgamation, or demerger with the regional director. And government introduced the concept that in case of small companies, the merger can be done with the regional director only. The companies are not required to approach to the NCLT. Friends, recently with effect from 1st September 2025, government can change the criteria for the companies which are falling under the fast track mergers. So nowadays, most of the mergers and amalgamations are dealt with by the regional director. And further, in case of NCLT, there was no time limit. There was no deadline in how much time the merger process will be completed. But in fast track merger, government had introduced a maximum time limit of 60 days. So in case of fast track mergers, regional directors has to dispose of the application of merger within 60 days, else it will be pre-assumed that there is no pendency and merger is done. So it's a very welcome step by the government. Now we professional like chartered accountants, company secretaries can handle the fast track mergers, because in this case we don't require to appear before the court. We have to just produce our documents to the registrar of company, and then the final application to the regional director. We have to make one appearance before the regional director if required, and your process is completed. Friends, again, one of the advantages of the small company is cash flow statement is not applicable in case of small company. Friends, cash flow statement is part of a financial statement, and financial statement under Companies Act is defined under section 2 subclause 40, which defines that in case of small company and OPC, the company is not required to prepare the cash flow statement. So it's again good for us as auditor that we don't require to prepare the cash flow statement. CARO is not applicable in case of small company. Friends, CARO, there are certain applicability criteria of the CARO, but all these criteria are old. Now, after amendment of this small company definition, it's a very relevant for us that we should check the status of the company, whether it is small company or not a small company. If it's a small company, then straightforward CARO is not applicable. We don't require to check the other criteria, applicable criteria, and straightforward we don't require to report on the CARO. Friends, in this point of CARO or cash flow, when confusion comes, some senior members says that even if it is not required to report us on CARO, but still we are reporting on CARO, then what's harm in it? Friends, take care. If anything which is not required to be reported by us and we are reporting, then it's a violation of our code of conduct. Any information of the client which we don't require to make it public, we are making it public through CARO or cash flow, then it's a violation of the code of conduct, and disciplinary committee can take action against us. So it's my personal advice that in case of small company, cash flow statement and CARO is not applicable, and we should not make it. We should not provide the cash flow statement and CARO. We should take care that if any company is now for present year of audit, it is covered under small company, then we should take care that in audit report we have deleted the word cash flow statement so that complaints can be made. Again, further advantages to the private small company: appointment of statutory auditors where rotation is not required. Friends, in other than small companies, there are some criteria, like if the company is having loan of more than 50 crores, then it cannot appoint any CA firm, partnership firm, for more than 2 terms of 5 years, or for proprietorship concern, it cannot be appointed for a term of more than 5 years as a statutory auditor of the company. But in case of small company, this criteria is not applicable. You can appoint a CA firm for a period of 5 years as statutory auditor of the company, and after end of the 5 years, you can reappoint that firm as the statutory auditor of the company. Retire by rotation is not applicable in case of small company. Dematerialization of securities is not required. And this concept, dematerialization of securities, was introduced in September 2023. And as per this rule and section, provision of section, every other than small company, every company which the status is other than small company is required to obtain ISIN and get its shares in the dematerialized form. And accordingly, we have to file 2 forms, PA6 reconciliation of securities with the registrar of companies on half-yearly basis for half year ended on March and 30th September. Friends, now this section is not applicable in case of small company. So it's a very good for us that routine dematerialization process is not applicable on us. Some of the companies which were covered under 4 and 40 crores criteria has got their shares dematerialized, and after amendment of this definition from 4 to 10 and 40 to 100 crores, now they are falling under the definition of small company. Then question arises, then in this case, what call we should take? So in my opinion, in this case, we should surrender the ISIN number issued to the company, and we should rematerialize the share in our paper forms, physical forms, so that we can avoid the compliances made necessary under this section. Friends, then the major benefit which is available to a small company is lesser penalties. Friends, in Companies Act, if any offense is conducted, offense simply means you were required to comply with any of the provision of the Companies Act and you are not complied with, or you are not complied with in the manner which is prescribed under that particular rule or particular section, then it will be an offense. Friends, in case of Companies Act, in every section, if there is any offense, there are 2 terms used in the whole act. One is penalty and one is fine. See, what is the difference between penalty and fine? The word penalty is used. Penalty is imposed during the course of e-adjudication, and penalty is imposed by the registrar of company. And in section where the provisions of penalties are mentioned, it is clearly mentioned in every section that in case of violation of provision of so and so section, a penalty of this much can be imposed by the ROC, Registrar of Company. Friends, please take care that in case of penalty, the ROC doesn't have any discretion to reduce or to enhance the amount of penalty. It is the calculation which is given in the provisions, relevant provisions. ROC has just to compute the penalty as per that relevant provisions and has to pass its order. And the another term used in this act is fine. Friends, fine is imposed by the regional director. If in any section the penal provisions is that fine can be imposed, then this case will be dealt by the regional director. ROC doesn't have any jurisdiction in this case. This compounding application will directly be filed with the regional director. And the regional director has discretion. In case of fines provisions, you will find that there is a range. Like if I talk about the violation of balance sheet or Schedule 3, balance sheets or financial statements are covered under Section 129 of the Act and Schedule 3 of the schedules, which prescribe the format, specific format for the Companies Act, financial statement. If we are making any offense for complying with the financial statement format, then it's an offense of Section 129. And in this case, fine, the range of fine is 50,000 minimum and 5 lakhs maximum. It means then regional director can impose fine on us ranging from 50,000 to 5 lakhs. How much fine will be imposed by the regional director? It will depend upon the capital of the company, turnover of the company, reputation of the offenses by the company. There are so many factors, and it's an individual regional director who has to decide the quantum of the fine. The difference between penalty and fine is clear. Penalty is dealt with by the ROC, and fine is dealt by the regional director. Friends, once the penalty is imposed by the ROC, then what remedy the company have? In this case, company can file an appeal before the regional director. Regional director will hear your appeal grounds, and he will decide whether the penalty amount can be reduced or not. And in case of fine, order is passed by the regional director, and like in Income Tax Act, we have so many forums where we can file the appeal. Like after passing of the assessment order by the assessing officer, first appeal lies with the Commissioner Appeal, then second appeal lies with the ITAT, third appeal lies with the High Court, and fourth with the Supreme Court. But friends, in case of Companies Act, there is no such differentiations. We don't have so many platforms. In case of penalty, we have one platform only, that is regional director. And in case of fine imposed by the regional director, we don't have any other appellate authority. So the only remedy which we have in our hand is that we can file a writ before the Honorable High Court. On that writ, High Court will decide what is the matter and how it should be disposed of. Friends, as per my limited knowledge, if we go to the High Court for any writ, in case of any writ, then High Court will admit the writ only if there is a question of law. If you want to reduce your penalty quantum and you have made the offense, then High Court will not entertain your writ application. So we should take care, and we should assume that the regional director is the final authority who will pass the order. So we should take care that we should represent ourselves properly before the Honorable Regional Director. In case of small company, government has given an advantage that the penalties, lesser penalties will be imposed on the company and every officer who is in default. This provision is governed by the section 446B of the Companies Act. This section says that penalty which shall not be more than 1/2 of the penalty specified in such provisions. Say for example, if in any provision there is a penalty quantum of rupees 1 lakh on the company, then penalty of 50,000 will be imposed on the company under section 446B. And further, there is a maximum quantum. In case of company, penalty cannot be imposed for more than rupees 2 lakhs. And in case of an officer who is in default, maximum penalty of rupees 1 lakh can be imposed. So it's a very good for us that in case of small company, the maximum quantum is there on company 2 lakhs, and in every officer who is in default is 1 lakh. Friends, after these advantages, I will discuss 2 exemptions available to a small company. See, these both are the exemptions which are available to a small company on fulfillment of certain conditions. These exemptions are given by notification dated 30th June 2017. First exemption is IFCR is not applicable. IFCR is again internal financial control reporting, which is part of our audit report, independent audit report. If status of your company is small company, then IFCR is not applicable. Second exemption available to the small company is number of board meetings. Friends, the provisions of board meeting is governed by section 173, which says that every company will have at least 4 meetings in a year. But in case of small company, here a more exemption is given that if your company is conducting 2 meetings in a year, then it will be assumed that you have complied with the section of 173, subclause 5. But the only care we should take care is that the gap between both the meetings should not be less than of 90 days. Friends, here the year is calendar year. First half will be from 1st January to 30th June, and second half will be from 1st July to 31st December. Friends, this is not like this, that you are conducting first meeting on 30th June and you are conducting your second meeting on 1st July and you are assuming that your compliance has been done. No. The gap between both the meetings should not be of less than 90 days. Friends, both these exemptions are available if your company has made its annual filing on time. So say for example, if you are calculating anything for financial 24-25 and you are checking the status of both these exemptions, then you have to check that whether the company has filed its annual filing for year 23-24 or not. If the company has not filed for 23-24, then these exemptions are not available. If the company has made the annual filing for 23-24, then both these exemptions are available. Friends, now I will discuss some general points to be considered while practicing in Companies Act. See, there are so many small things for which client is not concerned, client is not aware, and as practitioner we have to take care because client is not much aware about the provisions of Companies Act, and penalties under Companies Act is very heavy. So it's our responsibility that we should take care that the compliance of Companies Act is done properly, so client is not facing any sort of penal provisions. Friends, first I will discuss the provision of first financial year. The definition of first financial year is defined under Section 2, Clause 41 of the Companies Act 2013. Friends, if some old practitioners, some seniors are there, they know the provisions of the provisions of Companies Act 1956. Friends, in 1956, in case of first year of the company, there was an option with us. If your company is incorporated after 1st January of the year, then we have an option. We can complete its first year of the 31st March of that particular year, or we can complete the first year on the next 31st March of the next year of the incorporation year. Say for example, if company is incorporated on 25th January 2025, it's a first year. Under the old act, it was on our option. We can complete the first year on 31st March 2025, or we can complete the first year on 31st March 2026. Friends, the point here what I want to discuss is that in case of Companies Act 2013, the definition of financial year has been changed, and now it's a mandatory for us that first financial year of the company will end on the 31st March of the next year. Say for example, again I come to the number of this example. My company is incorporated on 25th January 2025. Then I cannot complete its first year on 31st March 2025. It will mandatorily be end on 31st March 2026. We don't have any option to complete its year for 31st March 2025. We cannot conduct its audit. We cannot conduct its audit under the provision of Companies Act. We don't require to have the AGM of the company. But so far as matter is concerned with other acts like GST or Income Tax Act, if I talk about the Income Tax Act, we have to file its return for 31st March 2025 because in income tax financial year ends on 31st March of the respective year. If its a turnover exceeds for the prescribed limit for the tax audit, we have to conduct the tax audit as well. Again, in case of GST, we have to file annual return. We have to make all the compliances for the financial year ended on 31st March 2025. But specifically in case of companies, we cannot conclude our first year on 31st March 2025. We should take care that our year is ended on 31st March 2026. It's a common mistake which we have noticed in so many balance sheets in case of first year, that the CAs are adopting for the first year on 31st March 2025. We should take care that now it's a mandatory provision of the Companies Act. We cannot change it as per our convenience. Friends, then I will talk about the DIN number with the name of the directors. Say for example, if I talk in a very easy terms, we are preparing the financial statement of every company for every year. And we are mentioning the name of the signing person, that Mr. X, director of the company, Mr. Y, managing director of the company. And we should take care, wherever we are mentioning the name of the company and his designation, we should mention the provisions of DIN. DIN number of that person should be mentioned with his name, because it's a mandatory requirement of Section 158. If in case we are not mentioning the DIN number of that relevant person, ROC can adjudicate this default, and penalty, again in this case penalty is very heavy and unnecessary. Without any bad intention, we have to face the penalty provisions. So we should take care that DIN number of the person is mentioned along with his designation wherever we are getting it signed. Friends, ROC filing. When we are filing the document with the ROC, in most of the companies, which are non-working companies, yeah, they are less working companies, we have to mandatorily make the final annual filing of the company, like financial statement and annual return of the company. Friends, earlier in Act 1956, there was a concept in which ST, instead of physical signature, ST option was there. What we were doing at that time, we were just converting the Excel file into PDF and marking it as SD. In place of sign, we were mentioning SD and we were filing it with the ROC. But friends, with new Act 2013, this e-filing with SD is not allowed. If you are filing your document with SD option, then it will be assumed that you have not filed the relevant document with the registrar of company. Then what option comes to us? First option is physical signature. The best option is physical signature. Then we have option of digital signatures, which is electronic signatures on the documents, which is mandatory. Friends, in case of using of DSC, we should take care that we are signing the document on the respective current date only. We are not signing the documents in the back date. If we are filing documents with the ROC as on today, it should be signed on the present date only. If we are putting DSC, because DSC contains the date of signing of the document as well as the time of signing of the document. So in case of financial statement, in my opinion, we should take special care that we are not putting DSC of the parties of the directors on the financial statement in backdate. Friends, nowadays there is a concept of more companies are incorporated, more companies are working, and in few companies we are noticing that there are so many litigations, there are management disputes, there are disputes between husband and wife, there is dispute between the brothers of the who are directors of the company, dispute between the partners of the company. And in that case, if we have filed the document with using DSC, then both the directors can make us the party of the default in court, because they can say that some DSC was used to be in the CA's office only and he has used without our consent. So it's my personal opinion that we should take care at the time of filing of the financial statement with the ROC or any other document which is going to change its management, like directors change, like share capital change, like allotment of further shares or buyback of shares. We should not use the DSC until or unless it's a very urgent and you have the supporting document in favor of you for using the DSC, else it can create problem for us like a professional. Friends, edit log feature in the software. Friends, now as on today, 100% companies, maybe except some exceptions which are non-working company, most of the companies are maintaining its books of account in softwares. Like most of the companies are making their accounts in Tally software, SAP software, and any other software. So now government has made mandatory the edit log feature in the software. This concept is applicable for every company, irrespective of its size. It's a limited company, it's a private limited company, it's a small company, it's other than small company. We have to make comment on this edit log feature in our audit report. And if the company is not not maintaining proper edit log feature, we have to report in audit report, and accordingly, company has to make the comment on that point in its director's report. We should take care that we are making proper compliance of this section. For 2025, there was an additional point for preservation of the edit log features, which is mandatory for all of us. Friends, nowadays, every act is going to be stricter, more strict than earlier. And we don't know when government will ask that please attach the edit log documents preserved by you on a sample basis along with the annual filing. Then we will don't have any answer. So we should take care that edit log feature is activated in their software and the companies are using it properly. So we should make a report accordingly. Friends, and declaration from the directors regarding their qualification under section 164 subsection 2. We all chartered accountants in our audit report, we are certifying that none of the directors is disqualified under section 164 subsection 2. So in this point, we should take care that we are getting the declaration from the directors that they are not disqualified under this clause. so that we can keep our audit working papers properly. Friends, route map of the venue of the general meeting. This is again a common mistake which we have noticed from the notices of the annual general meeting and notice of the extraordinary general meetings. Friends, like in case of our institute, C Institute, we are governed by the accounting standards, which are governed by Section 133 of the Companies Act. On the same pattern, the Institute of Company Secretaries of India has issued secretarial standards. There are 4 secretarial standards. Secretarial standard 1, 2, 3, 4. 1 and 2 are the mandatory, and 3 or 4 in the recommendatory nature. SS2 provides that every notice of the meeting should contain the route map, which is Google Map, we can say in general parlance. So we should take care that in every notice of AGM or EGM, we are enclosing the notice of we are enclosing the route map of the location of the general meeting. Friend, in case of loan taken from the directors and their relatives and shareholders, there is self-declaration. See, this section is very dangerous. These are the provision of section 73 to 76. This offense is non-compoundable. In this case, the only remedy is penalty as well as imprisonment. Friends, in case of private limited company can take loan from its directors and their relatives, which are defined under section 2, subclause 76, and subject to certain conditions, it can take loan from shareholders. In case of limited company cannot take loan from directors and its relatives. So the basic condition for providing loan to the company is that the money provided to the company as loan should be sourced from their own funds. It should not be the borrowed money of the loan provider. So we all are doing audits. We all are certifying this type of financial statement. So we should take care that we got the self-declaration from the related party who has given loan to the company that this amount is sourced from their own funds. Authorization letter to use the DSC. Friends, in most of the cases, the DSCs of the clients are laying in our offices. We are using them for various purposes like GST returns, for income tax returns, for ROC returns. Friends, this is my personal advice that for using the DSC, we should take care that we should obtain an authorization letter from the respective director that our office is authorized to use the DSC for the purpose of filing of various returns like GST returns, income tax returns, or ROC returns, so that in case of any fraud or any violation, any other things, we should not be make a party by the respective directors. Friends, maintenance of the books of accounts at a place other than the registered office. It's again a common mistake from the company side. As per the Companies Act, maintenance of books of account other than the registered office is allowed. Say, for example, if your company's registered office is located in Calcutta and your company is working in Jaipur, then you are maintaining all your books of accounts of the company in Jaipur only, because the Calcutta office is your registered office only. You are not carrying on any business activity in Calcutta. You are carrying all your business activities in Jaipur only. In that case, there is a concept of filing of form with the registrar of company, that is AOC 5 form. If you are maintaining books of account other than a registered office place, we have to intimate to the ROC. And in master data, you will observe that there are 2 addresses are reflected in the master data. One address is the registered office of the company, and another address is the place where books of account is maintained by the company. This is a common mistake that company is maintaining its books of account at a place other than the registered office, but they are not filing AOC 5 with the ROC. So we should take care that in this case we should file the AOC 5 form. Preservation of books of account like income tax, GST. In every act, there is a limitation period for which we have to maintain our books of account. In case of Companies Act, that period is current year plus 8 years. Books of accounts shall be preserved for a current year plus 8 year financial years. After then, may be destroyed with the approval of the board. After 8 years, you have to pass a resolution in the board meeting. And after passing the board resolution and getting the approval of the board, company can destroy its financial records. There are certain records of the company which are permanent in the nature, like minute books, which cannot be destroyed even after the period of 8 years. So before destroying any record, we should check the relevant provision that which records we can destroy or which records we cannot destroyed. Friends, now I will talk about the present departmental working structure, how the department is working nowadays. Like same concept as there is in income tax, everything is faceless. In ROC, everything is also faceless. Earlier, there was only one register of companies, the concerning register of companies of the state where the registered office of the company was located. But now the ministry MC has introduced various centers. In case of companies, we know where the centers are located, who are the officers of the centers. These all centers are located in Manesar, Haryana, and the all over India process is dealt with at the Manesar offices only. I will discuss in short all the centers. First center is CRC, Central Registration Center. This center was established in 2016, 1st January 2016, and this is the first center which usually work only for the incorporation of companies as well as LLPs. Friends, LLP Act is a separate act, LLP Act 2008, but all the LLPs are controlled and governed by the Registrar of Company. So we can say that both the acts, Companies Act and LLP Act, are the brothers and as governed by the same Registrar of Companies. Same in case of CRC, incorporation of new company and LLPs are dealt with the CRC. In case of existing LLP or company, if they want to change their name, then name availability will be provided by the CRC. After getting the name approval letter, rest of the process will not be dealt by the CRC. And friends, after incorporation of company, your jurisdiction of the company will be the respective state ROC, not the CRC. Next center is CSC, Central Scrutiny Centers. Friends, this center was established in 2021. This center, the work scope of this center is to conduct scrutiny of the all forms which are not approved on the forms which are approved on STP modes. Friends, in case of ROC filing, how the forms are approved? There are two ways to approve the form. One way is STP, straight through process, means whenever you will file the form, you will get a mail from the MCA that you have filed this form by SR number so and so has been approved and taken on the record. Friend, in STP mode, it means there is no manual intervention of any officer for checking the form. All the forms you are filing with the ROC are automatically approved by the system. And some of the forms are approved on non-STP mode. Non-STP mode means when we will file the form, that form will be opened by the respective manual respective officer. His team will manually intervene in the form. They will check the form. They will communicate with you if anything else they require. They will mark the form for resubmission. And when you will file the resubmit the form, then this form will be disposed of. Forms which are approved on non-STP modes. Forms which are approved on STP modes, there is no manual intervention at all. All these forms are approved by the system only. For these forms, MC has introduced the concept of Central Scrutiny Center. The only function of this center is to scrutinize the form on random basis, maybe some of the criteria they have developed. And if any form contains any discrepancies, that form will be marked for the checking to the respective ROC, and then respective ROC of the concerned state will take the further compliances of this form, whether he has to mark this form defective or not. It's the ROC code. Friend, then the third center is Center for Processing Accelerated Corporate Exit, CPACE. Friends, all the closure of LLPs and companies are dealt at CPACE. Earlier, these were dealt by the respective ROC. This center was established in 2023, 1st May 2023. First of all the strike off of all the companies, private limited companies, were dealt by the CPACE center. Now, with effect from 27th August 2024, LLP strike off is also dealt by the CPACE. Now, if any company wants to get its company strike off under the provisions of section 248 subclause 2 or LLP, then it has to apply to the CPACE center. The CPACE center will process your application and will approve the strike off process. Then, friends, Central Processing Center. central processing center like in income tax, all the returns are processed by the Bangalore CPC center. And the same concept, government has introduced the central processing center. This was established on 6th Feb 2024. The main work of this center is to check all the forms which are to be approved on non-STP mode. This center will check the form and will approve the form. Nowadays, the concerned ROC, our concerned ROC doesn't have much day-to-day work with the companies. They have very few forms with them to approve. Like if there is removal of any director, that form will be dealt by the local ROC. Any shifting of registered of state to another state, that form will be processed by the local ROC. Then if there is any amalgamation merger, then that process will be dealt by the local ROC. Otherwise, we don't require to go to a jurisdictional ROC. Friends, now I will discuss in short that what forms we require to file with the ROC. This is the normal filing. This is the fee structure introduced by the MCA. In MCA, the filing fees is decided on the basis of authorized share capital of the company. This is not the paid up share capital of the company. This is the authorized share capital of the company. Depending upon the size of the authorized share capital, the filing fees is rupees 2, 3, 4, 5, and 600 per document. And if your document is not filed on within the prescribed due date, then there is a concept of additional filing fee. This additional filing fees is depending upon the period of delay, and this is 2 times 2, 4, 6, 10, and 12 times of the normal filing fees. Friends, this chart is not applicable in case of annual filing, which is mandatory for every company. In case of normal annual filing, there are 2 forms which are governed by the per day late fee, that are form AOC4, filing of financial statement, and MGT77A, filing of the annual report. In both these forms, there is a concept of rupees 100 per day late filing fees. And friends, there is no maximum cap on it. There is no cap. If your form is delayed by 500 days, then you will be liable for additional fees of 50,000. If your form is delayed by 1,000 days, then it will be 1 lakh. System will calculate the amount. Whenever you will file the form, system will generate the statement. Now presently, the deadline for filing of annual filing for March 25 is 31st December 2025. Some professional guys are asking me that if we are filing on 2nd January, then what will be the late filing fees? It will be for 2 days, 200 rupees, or it will be from the original due date. Filing due date. Friends, it will be original due date. Like if your AGM is conducted on 30th September 2025, to file the AOC4, your due date is 30th October. And if you are filing the document on 2nd January, then your filing fees will be computed from 30th October to 2nd January. And you will get a challan of around 6,300 extra amount. Friends, there is what government is doing here. There is no difference between small company, any company having capital of 1 lakh rupees, or any company having capital of 100 crore rupees. Like if my company doesn't have any work, doesn't have any capital, then additional filing fees is 100 per day. And if my company is Reliance Industries Limited, then also the additional filing fees is 100 per day. Friends, here I would like to clear one more thing, that in case of incorporation of new company, nowadays there is no capital limit. Earlier there was a limit of 1 lakh rupees for private limited company and 5 lakh rupees for public limited company. But now government has removed this requirement. Now you can incorporate any company, either it may be private company or it may be a public company, along with any fees, any capital. It can be of 10,000, it can be of 1,000, it can be of 50,000, depending upon your call of the management. Friends, in case of filing a form, I would like to discuss one more thing. If we are filing any form after the respective due date, then we are depositing the additional filing fees. Is there any concept of penalty on it in addition to the additional filing fees? Say for example, in case of MGT 14, I am required to file this form within 30 days from the event date. but due to any reason, I couldn't file this form within 30 days, and I filed this form with 60 days. Then for 30 days, we have to pay the additional fees, 2 times of the normal fees. And can ROC impose any extra penalty on me for filing this late filing of this form? Then answer is yes. Friends, what in routine we are thinking that when we have paid the additional filing fees, there is no further consequences, other consequences applicable on us, but this is wrong. In every section, there is a separate provision. Like I'm taking the example of MGT 14. This is governed by section 117 of the Act. Section 117 of the Act says, if you are filing any form after the prescribed due date, then a penalty of this much can be imposed on you. And friends, take care. If any notice is issued to us for late filing of the fees, then we are liable to pay the additional, pay the penalty amount. We don't have any option. So while filing any document late from the due date, we should take care. We should calculate the additional filing fees and the penalty which can be imposed on us, and we should tell us it to the client that this amount can be imposed on you. I think the time allocated to me is 4 to 5, and this time is over now. So I will hand over the mic to Anshul. Anshul, how much time I have?
Sir, if you wish, you can continue for another 5 minutes.
Okay, okay. ये स्क्रीन शेयर हो रही है अंशुल?
हाँ, स्क्रीन चल रही है.
हाँ, ठीक है. Again, I will discuss some filing of forms. One form is DIN KYC form. This DIN KYC form is applicable on every individual. This is person to person based. This is not company or LLP based. Once in a year, we have to get our KYC done. Friends, in case of KYC, the relevant point which I want to tell you is, if any person has obtained any DIN number, this DIN number cannot be surrendered during his life. There is no concept of surrendering the DIN number allocated to a person. If once you have allotted the DIN number, it cannot be surrendered during the lifetime of the SSC. There is no concept of surrender of the DIN number. Yes, if you have 2 DIN numbers or more than 2 DIN numbers, then it's a mandatory that you are required to surrender the second DIN number which you have obtained after the first DIN number. The surrendering of second DIN number applications are dealt by the regional directors, New Delhi. And further, in case of this duplicate DIN, we have to get our offense adjudicated by the respective. We should take is that before applying for any DIN, we should check our records that whether we have the DIN or not. If due to any reason you have obtained a duplicate DIN, then it should be surrendered immediately. And in case of live person, you cannot surrender your DIN at any time in your life. If your DIN KYC is not done within the due date, that is 30th September, then your DIN will be deactivated by the ministry. And to get it activated, you have to pay the late filing fees penalty of rupees 5,000 per DIN. AOC 4, AOC for CFS, AOC for XBRL. Friends, earlier for AOC 4 and AOC for CFS, there were 2 separate forms which we required to file. But after launching of V3 portal during August 2025, now we don't require to file 2 separate forms. Now these forms are interlinked form. When we will file the AOC 4 form, system will ask for the AOC for CFS. Fees is taken by the MCA for 2 separate forms. Another change in AOC for AOC XBRL is made. In case of XBRL filing, earlier the hard copy, signed copy of financial statement, board report, and notice of AGM was not mandatory. From this year onwards, Ministry has made mandatory that the copy of board report and copy of the audited financial statement, signed financial statement, should be attached with the XBRL filing. Earlier it was not mandatory. In case of XBRL filing, what is the obligation on us? If your company is liable for XBRL filing for any reason in any year, then for every year, it is required to file it's a document in XBRL form. Mainly, XBRL is applicable in case where the paid-up capital of the company is more than 5 crores, or the capital or the turnover of the company is more than 100 crore. Friends, here if you are fulfilling any of the conditions, then you are liable for XBRL. So say for example, if during 24 23-24, turnover of my company was rupees 125 crores and my paid up capital is 1 crore. I was liable for XBRL filing. But for 2025, my paid up capital is again the same level. There is no change, and my turnover is reduced from 125 crores to 25 crores only. Even my turnover is below 100 crores, my capital is below 5 crores, I am liable to file XBRL. I cannot change my mode of XBRL filing. This is common mistake which is conducted by the companies, that they are checking the status for every year filing, whereas it's a very simple law for XBRL filing. Then once it's applicable for you XBRL filing, then it's always XBRL filing, in which mode we have to file our company's filing. We have to file within 30 days of the date of AGM. Late filing, we have discussed earlier, 100 rupees per day, there is late filing fees. Then these are the penalty provisions. MGT 77A, we earlier discussed. For MGT 77A, there is a time of 60 days. For MGT 7 is the only form which is required to be certified by the practicing company secretary. Then ADT 1. ADT 1 is the form for appointment of statutory auditors. In this form, we have to take care that the due date to file this form is 15 days from the date of appointment. Say if your AGM is conducted on 30th September 2025, the due date to file this form is 15th October. After then, there will be the additional fees liable on you. And this form is filed in every 5 years, or if there is any change in the auditor, then you are required to file this form. In case of new company, filing of ADT 1 for the first auditor is not mandatory, but it's a good practice that we should file the ADT 1 for the first auditor as well. An auditor is appointed for a period of 5 years in AGM concerning annual general meeting of the company, and every year we don't require to file the form. Anshul, now I think I should conclude my session.
Thank you, sir, for this insightful session. We have around 500, more than 500 participants who is listening to the session, and we have received few questions also. So next 2-3 minutes we will discuss the questions. The first question is: in case of a small company elected to provide cash flow statements voluntary for 2 years,
Yes.
can they decide to discontinue thereafter?
Yes, if the status of the company as an audit date is small company, we don't require to give this CFS.
Great, yeah. The another question is the giving the roadmap of office in the meeting notice, is it mandatory for a small company?
Yes, it's a mandatory for every company. This is governed by section 118 of the Companies Act.
Thank you. You have said in your session that the books and the few documents can be destroyed after 8 years and few cannot be. So which cannot be scrapped after this period?
Minute book cannot be scrapped.
Minutes books cannot be scrapped. Okay. And the next session is next query is for Caro applicability. There is a separate limit specified in Caro 2020. So which is much lower than a small company. So Caro 2020 is still applicable in these cases, small company cases.
No. If your status of your company is a small company, then Caro is not applicable at all. You don't require to check any other criteria. If you want to make it more clear, then our institute has issued a guidance note on Caro. You can go through the Caro guidance note, and where it is clearly defined that in case your company status is small company, then you don't require to check any other applicability also.
Thank you, sir. We have received some appraisals also. Very insightful, the great session, sir. Thank you for session.
Thank you, the audience.
Really great to listen you. You have just covered many of things in just last 50-60 minutes. The forms, fees, procedural parts, the hierarchy of department, lot of things which is we chartered accounts are generally not aware about all the things. This is the core area of basically company secretaries. So thank you for sharing all this knowledge. Thank you, sir. And further
Welcome. Thank you.
Further going forward, we have a next session which is on new labor codes. In new labor codes, there are a lot of areas and few key changes which require immediate attention of employer as well as employees also. So for this, we have a new speaker, C. Sunil sir. which is also from Jaipur. Tag team ये screen share बता देंगे. So for the next session, we have CS Sunil Kumar from Jaipur. He have an experience of 14 years professional experience. He is chartered accountant, company secretary, law graduate, and had worked as a peer review, forensic audit, conquered many areas. He is working. He has expertise in RERA and labor codes. So he is not better than Sunil sir, who can just deliberate and just share the key changes of new labor codes. So we welcome you, sir.
Thank you, Sunji. Thank you for your nice introduction, sir.
Thank you,
Thank
sir.
you.
The mic is yours. Please carry your session. Thank you.
So first of all, I will thankful for CPE committee. Today it is a very important topic. We all know new labor codes have been notified on 21st November, and there are certain changes, but they have very key impacts. So we have to discuss that areas that will have very large impact on the industries as well as from the auditor point of view. So today we discuss in little bit. I have mentioned certain areas in this slide where we will cover some important provisions. Sir, I am visible, sir? Am I visible? Sir, I am visible, sir? Am I audible, sir?
Yes, sir. Please go ahead, sir. You are
Yes, sir,
audible
audible.
and visible.
Okay. So now I will discuss some critical provisions where we will have to check how we have to make compliances. That is mandatory. First of all, we'll discuss the some important provisions. First of all is appointment letter. There are changes in mandatory issuing of appointment letter. If you want to join, we want to hire a new employee, it is mandatory for every employer to issue an appointment letter. And for existing employees, if they have not issued the appointment letter earlier, so they will have to issue within 90 days appointment letter from the date of implementation of this code. So before issuing of appointment letter, we will have to identify the details and terms which was agreed among the employees or workers and the employer. Still, rules are to be notified and the prescribed contents will be taken from the rules. But we will have to prepare ourselves if we have to issue appointment letter. Second part is wage slip. It is mandatory to issue wage slip. So wage slip has contains the component of the wages or salary. It will be governed. It will be reconciled with the appointment letter. What we have mentioned in the appointment letter. Third is strict payment timeline. Here, there are very strict payment timelines. Earlier, also there were timelines, but they are slab for employers having 1,000 up to 1,000 employee. They have to make payment by 7th, and employers having more than 1,000 employees have to make payment by 10th. But now it is streamlined by 7th. If it is monthly employee, then we will have employer have to pay by 7th of the next month. If it is daily employee, daily wages employee, it will have to be paid by the same day. But it is very important change. If there are employee leaving the organization by termination, resignation, or any otherwise, then full and final settlement will be done within 2 days. It's a very important change. What is the current practice? There, it may take 45 days or 1 month cycle to settle the employees who leaves the organizations. So now employer will have to take care. Full and final settlement will be done within 2 working days. Next, we will discuss wage definitions. Very important definition, and what is the impact of the changes. We all know that 50% capping of allowances has been specified in the law. So we will discuss later. Next, ESIC compliances. It is very important issue. It will impact on the employer's liabilities. And about next, we will discuss about gratuity registration also. The gratuity provisions are similar, approximately earlier provisions, but there are certain changes. We will discuss 2 or 3 changes regarding registrations, regarding the fixed term employee employment employees, 1 year eligibility. Second, we will discuss on the performance appraisal system. It's very important by implementing of this code. There are no changes in the bonus, but we will discuss some points. They will impact on the statutory bonus payment. There are certain changes in the grievance redressal committee. Every establishment which has 20 or more persons have to form a grievance redressal committee, and there are changes regarding the women involvement. Now, thereafter, we will discuss working hours and overtime limits. It's a very important points to be discussed. Okay, what is the daily working hours limit? What is the weekly working hours limit? And procedure, compliances before doing overtimes. Then we will discuss about annual leave entitlements and other things. So I have identified some important points to be discussed here. We will discuss one by one here. There are certain important definitions under the code on wages. First, contract labor. We all know the contract labor, but there are certain changes. First is it includes an interstate migrant worker. Some small angle has been changed in the interstate migrant workers who will fall under the interstate migrant workers. Earlier, only the worker routed through the contractor will fall under the interstate migrant worker. But now, if worker routed from one state to another state through its own, it will also part of interstate migrant worker, and it will also be fall in the definition in the contract labor. So, if wider coverage, wider safety has been provided to contract labor by this code, because principal employer as well as contractor both are liable to contract labor. Now we will discuss the definition of wages. It's a very, very, very important, and we'll discuss definition. There are certain confusion about the wages definition. Some professionals are thinking that it includes only basic pay, DNS allowance and retaining allowance, nothing otherwise. It is not. Whatever is to be payable by the terms of employment will be included in the wages. And after that, there have statutory specific inclusion. This basic pay, DA and retaining. It's not only that part. That part will be the statutory inclusion. It means if some person asked me whether special allowance will be included under the definition of wages or not. So it will also cover in the definition of wages. It should not be fall under the exclusion. So we will have to identify, we will have to analyze this definition in 3 parts. Okay, what is the meaning, what is the inclusion, or what is the exclusion? Then we will discuss the provision. So basic pay, DNS allowance and retaining allowance is the specific inclusion, and there are some exclusion like house rent allowance, bonus, overtime, commission, traveling allowances, something. This is not included in the definition of wages. But the important change is the 50% rule. The allowances, any exclusion cannot exceed 50% of the total remuneration. If it exceeds by 50%, then it will be part of the basic wages. So now we will discuss the impact of this definition. Earlier, under the Payment of Wages Act, under the ESI Act, under the PF Act, under the Payment of Gratuity Act, there are different definitions of the wages and salary. Then what would happen for the purpose of computation of gratuity, for the purpose of computation of bonus, for the same employee, different salary was to be taken for consideration for calculation of different entitlements, different liabilities. But now, by changing this definition, there are certain benefits, financial benefits, or some we can say coverage area also. For example, in ESIC, Employee State Insurance Corporation, we all know that there are limit of rupees 21,000 for coverage of employee. The employee who is eligible, whose salary is up to 21,000, inclusion of all allowances, is covered under the ESIC. But by changing of this definition, what will impact? If employee has gross income, the gross salary is around 40,000, and salary structure has been done in that manner, 50% is the basic and 50% for other allowances, then what would happen? His salary under this definition would be a 20,000. 20,000, then it will cover under the ESIC insurance. So the employee who was outside under the purview of ESIC will now be covered under this code, and employer have to insure that employee also, which was not falling under the ambit of ESIC. Still, we are receiving regular circulars from ESIC, and rules have to be notified. But employers have to consider the salary structure along with the HR policies, with the standing orders, and other things. Salary structure cannot be redesigned, restructured on the basis of only single parameters. We will have to consider the minimum wages also, because minimum wages is applicable to every employee. Earlier, it was applicable only in scheduled employment, but it is applicable to everyone. Appropriate government have been power to decide the minimum wages, but the central government has introduced a concept of floor wages. Central government will notify the floor rate below which the state government cannot notify the minimum wage rates. One point is to note here that if already minimum wages prescribed by the government at present cannot be reduced further to align with the floor wages. If there are below, then it will be increased at least to align with the floor wages specified by the central government. So employer must ensure that wages is equal to minimum wages. Now, the very important point, there are certain confusion. What will be the salary to check whether compliance has been done, whether it will be gross salary, whether it will be a salary only basic and DA, and what we will include to check compliances, whether minimum wages compliances has been done or not. So the appropriate government have been empowered. Who will specify what will the part of component. It may be a basic plus D also, or it may be all inclusive wages. So it may differ from appropriate government to government, one state and another states. We discussed payment of wages. Employer will have to pay the salary before 7th of the next. If it is a monthly employee, if it is a daily employee, it is to be paid by the same day. We already discussed the final settlement within a 2 working day. Now, we will discuss the very important change in the Provident Fund Act and ESIC Act. which has been consolidated under this codes. Earlier, voluntary applicability is was allowed in the PF Act, but now ESIC has also allowed the voluntary applicability of this law, this provisions. If any employer who has less than 10 employees but wants to take benefits under the ESIC law may apply for registration under the ESIC Act and may take the benefits under the ESIC provisions. But earlier there was no provision for exit. Once if you take voluntary coverage under the PF, you may not opt out from the scheme, and ESIC there was no option for entry also. But now it is very welcome change, and option has been allowed. If you have taken a voluntary registration, it is applicable only for voluntary registration, either PF or ESIC. If you have taken voluntary registration and you don't want to register or you don't want to comply with these provisions, so you have the option to exist in both schemes under PF and ESIC. So what is the intent of the government? The employees should be covered under the PF or ESIC. They should not be unorganized. The employers, establishments will have to consider whether ESIC benefits are more favorable them or not, and also they may check it. They may apply for registration, and if it is not favorable, then it may opt out that scheme also. Now we move on the very important one, ESIC default. If by default of employer, employee is not able to take the benefit of ESIC, then what would happen? ESIC would provide the benefits to the employee, but ESIC will recover that amount which was paid by ESIC from the employer. It is the capitalized value. So it may be a very large amount, very huge amount to employer. So they should ensure if any employee who falls under the ambit of ESIC is insured on timely or not. If benefits for which the employee was eligible are deprived from the benefits, then employer will have to pay the capitalized value to the ESIC. So it is very, very important points employer will have to check. In gratuity, we have also very, very important changes. The earlier the employee who was under the fixed term employment was not allowable for gratuity because the 5-year terms was not there. So, but by this code, by applicability of this code, the benefit was extended to fixed term employment as well. If they complete their 1 year, then they will also be eligible for gratuity benefits. At present, there are certain confusions among the professionals. Every employee is eligible by completing of 1 year of service. So it is not same provisions is there, but benefit was provided. Benefit has been provided to fixed term employment only for that employees. 1 year clause is applicable. If they are regular employees, it will be same provisions that was earlier. Very important change, compulsory gratuity insurance. Earlier, the gratuity insurance was governed by the rules. Just like Telangana and one more state government has notified their rules by which the employer will have to take compulsory gratuity insurance. But now, under the Social Security codes, gratuity insurance is mandatory. If there are two things, we will have to take registrations, and before taking registrations, we will have to obtain the insurance policy. So there are very important points to analyze that whether establishment have to obtain the insurance policy under their own name or have to form a gratuity trust, approved gratuity fund, because there are certain confusion how the income tax benefits will be allowed to employer. If employer does not form the approved gratuity trust, so whether income tax benefits will be allowed for that expenses or not. So there are certain confusion from the income tax point of view, but from the labor gratuity law, from the point of view of social security codes, it is mandatory to obtain the gratuity insurance either in the name of approved gratuity fund or in the name of company, and then apply for registration. So it is very important. But in the present practice, the employers are making only provisions or taking a valuation report from actuary is not sufficient to make the compliances under the gratuity law. Now we will discuss some important provisions under the Occupational Safety, Health and Working Conditions Code. There are two important parts in this course: welfare and safety of the worker. We all know the one incident in the Goa in a nightclub was a fire accident. Accident was occurred there, and around 20 workers died in that incident. So, and the employer, I think, owner of that nightclub, Luthra Brothers, had gone to Thailand. So now it is very important provisions. We have to check the working conditions where the worker is working, whether there are proper ventilation, hygiene, safety, drinking water, and other facilities are there. If there are a mandatory license requirement, they will have to obtain, but it is very common license provisions are there and not need not to be taken under the under different codes. So, under the OSH codes, employer will have to review their for the working conditions of the employees. Next very important parts: working hours, leave and overtime. Every employee is thinking about that provisions, how they will manage. So the Social Security Code has specified that the normal working hours will constitute of 8 hours, and if there are 6-day week, so 48 hours, we will it will be the normal working hours. But now, if one important questions the employer thinking that if there are normal working hour timing is 9:30 to 6:30, 10 to 7, so it is around 9 hours working. And if there are 5-day working, then they are deeming that it is only 45 hours. So in courts, it has been specified that the law, the provision which is more favorable to the employees will be taken into consideration. So it will be able to check if 8 hours is normal working hours and we take work on 9 hours. So it might be there 1 hour will be treated as overtime, which will be paid at least twice a rate. So we will have to check the rules as well, but the working hours should be taken into consideration by the implementation of this code. Not only thinking that we are only 5-day working, so we don't fall under the overtime working. So it should be reviewed as both daily basis or weekly basis. Second important point is that overtime cannot be taken without the worker consent. So it will have to, employer will have to ensure that the written consent has been taken before doing the overtime. Second important part is annual leave entitlement. Earlier, there were 20 to 40 days working to eligible, make them for leave. But now this time has been reduced by 60 days. It has been up to 180 days. If any worker has done 180 days work, then he will be eligible for the leave. He will be entitled for the leave. Some important changes regarding women working. Okay, women earlier there are certain restrictions regarding the women working, and it has been permitted around all establishments. The women can do, but important part is there should be some safety provisions and their consents. So if any establishment has the women employee, they should review their HR policies as well as their safety structures, and should obtain their written consents if the time is after 7 p.m. and before 6 a.m. Now we will move on a very important part, contract labor. It under earlier this applicability was vary from 20 to 50 workers state to state, but now this limit has been increased to 50 workers. But they are very important. There is some changes, so it will have to take consider immediately. If there are 50 or more contract workers, then payment. It is very important part कि employer will have to check कि whether contractor has paid their worker salary on time or not. Contract labor की salary time से मिली या ना मिली. It is very important part because after paying the salary, it is the duty of the contractor to digitally intimate, electronically intimate कि salary has been disbursed or not. If salary has not been disbursed by the day, for example, we take in this 7th is the last date, due date, and employer has does not obtain the intimation from the contractor regarding the salary payment of the employees, then it is the duty arise of the principal employer to pay that employees immediately. Now, employer cannot say that he is not aware what is the points, nothing. Employer will have to ensure that salary has been disbursed along with the regular employee as well as the contract employees. So, very important part is that contractor should be well aware with the provisions and should be compliant of the law. I have specified some important provisions. Contractor license. If contractor have to obtain, if there are 50 or more workers under the contractor, so it is the mandatory for the contractor to obtain the license. And it is the duty of the principal employer to check if contractor have to obtain, is required to obtain the license, then he should obtain the copy or to ensure whether he is registered, he is licensed. If he is not taken the license, then principal employee is liable. So contractor compliance is very important. We have discussed the monitor wage payments. Earlier, it was not monitoring by the employers, but now it is very important part. Second, next is social security benefits, PF, ESIC, and other benefits. Earlier, what would happen? Contractor would provide the supporting documents, PF, returns, ECR, and challans, but did not provide the details of the employee who was attendant, who was their attendance or not. Now, every employee, either in the knowledge of principal employer or not, principal employer will have to ensure all the benefits, retirement.
Due to some technical reasons, सुनील सर डिस्कनेक्ट हो गए हैं, सर रिकनेक्ट करवाते हैं.
I guess sir has reconnected and he would be available soon.
Sir, am I audible, sir?
Right, sir.
Okay, thank you.
The screen is not shared. Please share again.
Oh, share again. Okay, okay. Now visible, sir?
So screen is not visible.
So please check, sir. Visible, sir? Anshul, please check.
स्क्रीन नहीं आ रही है, आप कंटिन्यू करें, बस स्क्रीन दिखते हैं बस।
स्क्रीन में क्या प्रॉब्लम आ गई? स्क्रीन नहीं दिख रही क्या आपको?
टेक टीम प्लीज लुक।
Please check. I'm sharing and I'm sharing my screen, but not visible to
स्क्रीन
audience.
शेयरिंग में कुछ इशू इन स्क्रीन शेयरिंग, प्लीज रीचेक।
Sir, yeah, maybe you can try relogging.
Just leave the meeting and rejoin, please.
You can take another 2 minutes, sir, and you can rejoin, sir.
Please just join now. Sir,
अंशुल जी प्लीज।
हाँ सर, स्क्रीन आपका शेयर नहीं हो रहा है, तो
अभी भी नहीं हो रहा क्या?
अभी हुआ नहीं स्क्रीन शेयर। तो मीनवाइल अपने पास कुछ क्वेश्चंस आए हुए हैं सर, अपन वो डिस्कस कर लेते हैं।
ठीक है जी सर, प्लीज प्लीज।
तो वी विल जस्ट use this 2-3 minutes. So, sir, one question is that for an organization having a 5 days week, so how many
Yes.
years and months will be deemed to be continuous service for 5 completed years for the purpose of Gratuity Act?
Sir, I think to 180 days, so there are 240 days for 60 week and 80 days, I think for 5 days working. I will have to check, recheck, but it is, I think, 180 days.
20 days for 5-day week. In case, second question is, sir, the new labor code, what measures a company should take to implement the changes with immediate effect? It is mandatory to implement the same just during the financial year.
Sir, am I audible, sir? Anshul ji?
You're audible, sir. You're audible. You can continue.
Okay, so my screen is visible or not?
It's visible, sir. It's visible. You can continue.
Okay. Thank you, sir. Thank you. So, we were discussing about the contract labor and principal employers liability. So there are very important changes. It will have to keep in mind by the employers. Social security benefits as well as the wage payment to be done on timely basis. It should not be delayed, and the delayed cost will be huge. So please check, or it might be the regular compliance audit by the principal employer to the contractor. We have already discussed about the employment. It is very important change is the employment injury parts also. The from residence to office and office to residence is also covered under the employment injury scope. So it is very important beneficial provision to the employee, and employer will have to protect. Employer will have to check if it does not fall. Employee is not the ambit of ESIC, then they will have to check. Yeah, they will have to ensure their employees by workman compensation policy or otherwise, because the area has been extended about regarding the employment injury. Safety records and employment injury, we have discussed ki, as far as practicable, whatever can be done by the principal employer, by the employer to its employees as well as contract labor, it should be done by the employer. Otherwise, the risk or monetary penalty may arise. We have discussed the common licenses. Factory at present, there are separate licenses, factory under the factory law, contract labor law. But now it is a single common licenses for all these purpose. And there are some deemed approval. There are certain time limits. If there are no approval obtained from the authority, then it will be deemed approval, and it might be there automatically registration should be generated. Some important changes in the industrial relation code as well. Earlier, the standing orders was applicable in the 100 or more workers, but now this threshold has been increased to 300 workers. So it is very welcome change for the MSME purpose. Next important change is extractions worker reskilling fund for the retrenchment. A skilling fund has been created in which by 15 days of salary will have to be paid by the employer. It will be used in the benefits of worker. So this is the summary. Okay, the 4 labor codes into summarized in 29 labor codes have been subsumed in the 4 labor codes, and 2 working days. The employer will have to make full and final payments, and within 7 days, employer will have to make a salary payment. So, employer will have to prepare itself for compliance as well as record maintenance parts. Okay. By implementation of these codes, if record is not properly maintained, it may be very costly to the employer. Thank you. It's from my side. Now we may take a question and answer. Please, Anshul sir, please let me know the questions if there are any queries. Anshul ji, please let me know the queries.
हाँ सर, अपन क्वेरीज कर लेते हैं.
Yes, yes, please.
तो सर क्वेरी ये थी कि जो न्यू लेबर कोड आया है अभी उसके अंदर, तो इसको
जी.
इसको इमीडिएट इम्प्लीमेंट करना है या इसको नेक्स्ट फाइनेंशियल ईयर तक कैरी कर सकते हैं?
This is very important confusions, Anshul ji. Some people are thinking it is immediately applicable. Some is thinking that it will be applicable from 1st April. But there are certain provisions for which the reference has been given to rules. So the provisions which are related to rules, so we will have to wait for the rules notification, because अभी Delhi government has notified their certain rules, but not notified, published their draft rules. So अभी rules आएंगे, तो जो provisions जिनका रेफरेंस रूल से कनेक्टेड है, आई थिंक दे विल बी इफेक्टिव आफ्टर द नोटिफिकेशन ऑफ रूल्स. बट इफ देयर आर एनी इंडिपेंडेंट प्रोविजंस दे आर वेयर रूल्स आर नॉट रिलेवेंट, the reference of rule are not there, I think it should be immediately, I think it is effective from day one.
ठीक है सर, उसमें स्पेसिफिकली क्वेरी आई है कि हाउ इज गोइंग टू चेंज द रिटायरमेंट बेनिफिट्स एंड सीटीसी फॉर कंपनीज ड्यूरिंग द ईयर. So the rules related to retirement benefits or CTC are changing during the year, or it will be changed next year?
सर एक बार क्वेरी दोबारा से बताइए प्लीज.
So how
Repeat करिए.
is going to impact the retirement benefits and CTC to companies during the year?
It's a very huge impact, sir. आप देखिए कि जैसे we analyze from one by one, analyze impact on the gratuity points. Earlier, actually valuation was done on the basis of basic and DA only. Okay.
Right.
And what was the basic? For example, if salary was 10,000 and employer has structured their salary, has structured their salary as 40% basic and 60% other allowances, then what would happen for this year? His salary will be recalculated by 50%. So if employee has served more than 10 years, 20 years, तो जितने ज्यादा ईयर उसने सर्व किया होगा, जितनी ज्यादा उसकी सैलरी होगी, उतना ह्यूज इम्पैक्ट उस पाएगा. तो वेरी इंपॉर्टेंट पॉइंट, अभी बिफोर रीस्ट्रक्चरिंग द सैलरी, एम्प्लॉयर विल हैव टू कंसीडर द कीप इन माइंड द सुप्रीम कोर्ट जजमेंट. I think in 2019 Supreme Court has announced one important judgment कि if any allowances is provided uniformly to all employees without any ground, without any performance, then it will not be treated as allowance, it will be part of the basic pay. तो अभी लोगों को मालूम है क्या, अगर 100 रुपए की सैलरी है तो हम 50 रुपए उसका बेसिक ले सकते हैं. ये गलत है. 50 रुपए बेसिक होगा तभी बेसिक ले सकते हैं. अगर 50 रुपए आर्टिफिशियल स्प्लिटिंग अपन करते हैं, सब ये अलाउंसेस है, तो ऑटोमेटिकली अलाउंस नहीं माना जाएगा. इट विल नॉट बी अलाउंस, it will be added in the wages. So before restructuring the salary, we will have to check the genuinity of the allowance we are paying.
Right.
So there will be huge liability.
Okay. What is the cutoff date for the same?
So cutoff date, मैंने आपको कहा ना कि cutoff date आज की डेट मानिए. ग्रेच्युटी जी, the courts have been notified. Okay. So when we will make the provisions from the after 21st November.
Right.
So we will have to make the provision by the new courts.
So the 21st November onwards is the cutoff date.
Yes.
And where the
Yes.
on monthly basis we can take the 1st December.
अगर
month.
अगर आज कोई एम्प्लॉय जाएगा, छोड़ के जाएगा,
Right.
तो उसको ग्रेच्युटी आज के लॉ के हिसाब से दी जाएगी.
Perfect, sir. ठीक है सर, thank you to all the queries you have addressed there, and thank you for sparing time and just addressing this. This is a vibrant topic, the new labor codes, which is again the non-conventional practice area for the chartered accountants. So thank you, Sunil sir, for sharing your time, and thank you to the CP committee, the chairman Satish Gupta sir, the vice chairman Vishnu sir, and all the tech team and the working team there to organizing these webinars for the audience and for giving platforms to us to moderate the session. So thank you all. With this,
Thank you, Anshul ji. Thank you, Anshul ji.
thank you.
Sorry for technical issues with the presentation. So thank you again to tech team and other CP committee and audience as well for their patience hearing. Thank you.
Okay. And a special thanks to all the audience, and request to all our participants to please log the Wednesday and Fridays for the CPE webinars which are going forward for the last 1 year. So thank you, and we are signing off the session. Thank you.
Please, thank you.